looks like we've got folks trickling in, but we've got a fair amount of intros. So I think we can go ahead and get started with those. My name is Susie Lee. I'm the Director of Nonprofit Strategy and Engagement at Forefront. I will be kicking us off for our Ask a Consultant program. Before we really dive in, we wanted to take just a moment and very intentionally create a space for folks to take a breath and do whatever they need to do to care for themselves. We know there's some really distressing news coming out of Atlanta, updates in Minneapolis, the rest of the world in general. We just wanted to acknowledge that and again, intentionally encourage folks to take a moment to breathe, take care of yourselves however you can and need to at any time. With that, I do want to launch into this very important conversation for today. So again, I am with Forefront. The Ask a Consultant program is a partnership with the Association of Consultants to Nonprofits. We sort of dreamt this program up at the beginning of the pandemic. It was going to be short, obviously it wasn't. But the thought was that there are lots of questions coming out. There was a lot of information flying really fast. And we wanted to share the resources of both Forefront and the Association of Consultants to Nonprofits to try to get important conversations, important information out to our community. So that's where this program came from. And we've been to keep up with topics that are really pertinent. So today is incredibly time sensitive, and I'm really happy to have all of the team here. We'll be doing the introductions of our panel in just a moment, but I wanted to encourage the participants to share a little bit about yourselves as well so that we can get to know you. So if you could share in the chat your name, your organization, what department you're coming from. Are you part of the management team, the development team, finance, what have you? You can share that with us. It's really helpful. And then also, if you have applied for some of these programs before, or if you're looking to apply for the first time. So if you can pop that into the chat, it'll really help us shape our conversation. And without further ado, I would like to introduce my friend, Claire Barner, the Director of Operations from Financial Health Network. She will be our fearless leader in the conversation today about COVID relief and tax benefits. Claire, do you want to take it?
Thank you, Susie. So I'm happy to be here. My name is Claire. I'm Director of Operations at a nonprofit called the Financial Health Network, and I'm very excited to learn along with the rest of you from our esteemed panelists today. So the American Rescue Plan has been signed. Stimulus checks are flowing this week. This is an exciting, dynamic time, and there's a lot to tap into. So we're here today to learn from the experts on how these COVID relief bills can best be leveraged for nonprofits. I do want to say from the get-go that we are providing guidance, advice, and assistance, but not legal advice. We encourage you to contact your primary accountant or bookkeeper to confirm specific answers to your questions for the topics raised today. And just a few housekeeping notes. You can keep your video on or off, whatever your preference. If you are able, we encourage you to turn on your video if you are asking a question. We are going to collect questions in the chat as we go and also reserve time toward the end for more of a Q&A live session as well. So feel free to drop questions you have whenever, and I will incorporate them into our conversation. And I do want to also say that, yes, we are going to send out any slides shared today, as well as resources after the fact. So you should be expecting that shortly. So without further ado, I think I will turn it over to Valerie to introduce herself first.
Sure. Hi, my name is Valerie Leonard. I am the founder of nonprofit Utopia. We're the ideal community for emerging nonprofit leaders, and we focus on consulting, capacity building, and coaching. And without further ado, I'm going to turn it back over to you. Enough said about me.
Daniel, you want to take it away?
Sure. Good afternoon. Hello, everyone. My name is Daniel Ronan. I run my own firm called Resilient Heritage, which focuses on strategic planning, fundraising, and public engagement for not-for-profits, typically in arts, culture, and heritage. I have clients in California, New York, and Mississippi, so as well as in Chicago, so pretty well spread out around the country, and I'm excited to learn from my fellow colleagues today and hopefully help many of the organizations on this call. Thank you.
Thanks. And Chitra.
Sure. Hi, I'm Chitra Iyer. I am coming to you today from Brooklyn. I am an attorney and also a long-term sort of nonprofit worker, most recently an executive director or recovering executive director. And I'm excited to support folks who I know are overwhelmed in the sector, figure out how they can get as much money as possible. And my particular excitement right now is around tax and tax credits and reading the small print so you don't have to. So I'm excited for today.
Thank you all so much for joining us. We're excited to learn from you. So Valerie, please get us started out by sharing kind of an overview of what's out there and kind of level set for us what's happening.
Okay, great. Is it possible for me to share my screen? And if so, I will do that now.
Yep, we can see it.
Right. Thank you. All righty. As you can tell from this, this particular screen, the American Rescue Plan Act is a whole lot more than just focusing on COVID-19 checks, so to speak. It's a very comprehensive plan, $1.9 trillion. And we look at it as a funnel. And the way this is arranged is, we're going from top to bottom, looking at where the most resources are allocated. And as you can see at the top, we have the $1,400 economic impacts payments, and those are valued in total at $410 billion. The next largest tranche of money is for state and local government aid, and that is $350 billion, billion with a B. And after that, we've got expanded unemployment and unemployment tax exemption at $289 billion. We also have transportation and infrastructure, financial services, and other education and labor valued in total at $268 billion. And then beyond that, we have expanded child tax credit and earned income tax credit at $135 billion, K-12 aid at $129 billion, energy and commerce, including testing, tracing, and vaccines at $122 billion, pension relief at $86 billion, expanded premium tax credits and health benefits for workers at $81 billion, small businesses, $50 billion, foreign affairs, veteran affairs, and agriculture at $43 billion. And then we've got the child and dependent tax credit, as well as other tax credits, that valued at $24 billion. So you can see that there's a lot of sausage that's been made, and I think it's all good. All right, are there any questions before I talk about this slide? And I promise you I won't linger here very long. All right, what you see here is a screenshot of a document that was put together by the National Council of Nonprofits. And our goal today is to, focus on the funnel. We're starting out with the most general and then drilling down to the more specific. And later on, you will hear more about the Paycheck Protection Program, the EIDL program, which is the Economic Injury Disaster Loan, and the Shuttered Venue Operators Grant Program, or SVOG. And this document summarizes, gives you very high touches as to what each program represents, and also gives you action items. And you'll have a full document in your handouts that we're going to be giving out, after the program. I just thought that this might be helpful to let you know what's in store, and then also to give you yet another resource, which is the National Council of Nonprofits, and go there and you can get all kinds of goodies like these to help you really understand what's going on with the new law. And in addition to looking at the law itself, I think it's really important to understand what's in the Biden COVID-19 plan. And you'll see, and this is just an excerpt from the plan. The plan itself is 200 pages. You will have a link to the plan so you can get into the weeds and read it from your own perspectives. But I share it with you this excerpt, just to let you understand that it's going to be really, really beneficial for our communities all over the country. The implications are pretty large. For example, they want to drive equity throughout the vaccination campaign and broader pandemic response. And if you, were to just kind of scroll down just a little bit, you'll see that in order to do this, they're going to be working with state, local, and community-based organizations and trusted healthcare providers like community health centers, and all of those entities are going to be very central. So they're not necessarily keeping this at the government level. We in the community are going to be called upon to really help implement this in a big way. All right, and then you see that they're going to be launching a national vaccinations public education campaign. In order to do that, see, they're saying this is going to be tailored to meet the needs of diverse communities and to get information to trusted local messengers and outline efforts to deliver a safe and effective vaccine as part of a national strategy. So those of you who have been involved in outreach efforts, the hard to reach types of populations as it relates to census and getting out the vote, I would imagine that this is going to be a very, very similar mobilization on the ground, making sure that everybody is educated about, COVID-19 and about the vaccines and all of that good stuff. Another highlight I thought was pretty good to talk about from the Biden plan is they're going to plan a U.S. public health jobs corps. And this is going to be very similar to AmeriCorps. And they're going to actually use volunteers and people who've been laid off to actually augment the workforce to help get out the word, be contact tracers and all of that good stuff to build up capacity to actually reach the masses. And other documents I think you should review. Again, the Biden plan, that's a 200-page document. It's an easy read, but it's a long read. I suggest that you go there and look and see what the implications could be for your organization and try to position yourselves accordingly. You should also read as many American Rescue Plan summaries as you can. Some really good sources are Forefront, which is co-sponsoring this event. HUD has a really good summary and you'll get a copy of that. ACF has a very good summary. Their summary even has a link to the various sections. They cite the various sections of the law. So you know exactly which section of the law applies to what provision. And then you also have Council on Foundations. They shared that document that I shared with you earlier. Other policy advocates, particularly people who are working in your particular subsector. And regardless of where you're from, any city, state, or county website will give you some really, really good information. And then I would even suggest, if you are really detail oriented, to go to the act itself, the American Rescue Plan Act, and you will be getting a link to that. I think it's really important that you at least get a grasp for what could possibly be in that plan. And a good way to do that is to look at the table of contents and then do research accordingly. And who knows what kinds of goodies you'll end up digging up. So without further ado, I'm going to stop my share. If there, I don't
Valerie,
know.
we do have one question in the chat from Yvonne. What is ACF?
Aid to Children and Families. That's a federal government agency. I'm sorry. So you go to acf.gov and go under COVID relief. I think you don't have to go further than the front page, and you'll see a link that you click on, and then you'll see every program that they have that's being funded through the new law, and they'll actually cite the section of the law.
All righty. Well, thank you so much for that overview. That was extremely helpful. Before we move to our next session, I do want to encourage folks who haven't done so yet to introduce themselves in the chat, your name, your title, your organization name, and if you've applied for PPP funding or any other type of assistance, that'll help us tailor our questions. You also could include the size of your organization by number of staff and the sector, because that would further help us tailor. So Daniel, can you help us understand more about eligibility and how to prioritize what relief to pursue?
Sure, thanks Claire, and thank you Valerie for that great introduction. I'm coming from a cafe here, I hope it's not too loud. First off, I just want to give you all a sense of where I'm coming from in terms of this broad guidance that I'm offering. I have helped several not-for-profit organizations with EIDL loan funding as well as PPP funding. So just to take a step back, so PPP stands for Payroll Protection Program. So this is by far probably the most used program that's very specific to COVID-19 relief, especially for nonprofits. And within the PP program, and I understand many of you have taken advantage of what's called the first draw, there are different carve-outs for for-profit organizations such as businesses and nonprofit organizations. So I'm imagining, since this is a not-for-profit call, I'll focus on the nonprofit provisions of PPP to lead us off. Really, it's a great program, and I've actually taken advantage of this personally for my business. But in the nonprofit sense, it really is a place to help not-for-profit organizations with working capital to sustain their businesses, especially those that have been hard hit from closures. You know, maybe you're a nonprofit that, like many, have suffered from being closed for long amounts of time, a dip in earned revenue that's really hurt your payroll. So this loan is really, and it's a loan, and I want to be really sure that folks know this. It's a forgivable loan that is provided by the SBA or the Small Business Administration. And really what the federal government is trying to do is trying to act as a lender of last resort. So it's assumed that you've gone through all of the other lending institutions in your community to find resources to get through the pandemic. We are a year in, basically, so many folks are now applying to this resource. And really what it looks at is looking at your relative gross receipts in years 2019 and 2020. Now this is calculated on a quarterly basis, and actually if you pull up a PPP application loan, it shows you the formula right there, but essentially it goes off of your average monthly payroll costs. And what that's trying to do is essentially give you the amount of your PPP loan. None of you are food businesses, so I'm assuming, but since those industries, including hotels, have been hit really hard, those industries that are classified as food businesses and hoteliers or in the tourism industry will receive higher loans. But for the sort of traditional nonprofit, really what you can do with this loan money is spend it on anything that's related to payroll costs, rent, utilities. It really is a lifesaver for many organizations. And now that we've had many institutions apply for PPP in the first draw, as it's called, we are also looking at forgiving these loans as well. So the federal government has put out an application. It's very simple to fill out. And if you have any additional questions on that, it really depends on the size of your loan. For instance, if you secured a loan that's larger than 2 million, you really have to go line by line of how you spent that money. But I'm assuming that's not the case in this room right now, this virtual room. But what needs to be sort of called out, if you're looking to apply for a PPP second draw loans, your second PPP loan, you'll have to show that you've spent the funds from the first PPP round of those funds that you received. It does not have to be forgiven, but I would try and get that forgiven as soon as possible, just to have a cleaner balance sheet, I think, within your organization. But what's great too about the second PPP loans, and something that I'll speak to a little bit later with the SVOG grant, the Shuttered Venues Operating Grant, is that in the past, actually, you could not apply for the Shuttered Venues Operating Grants, which really applied to live music venues, theaters that were very much hit hard by the pandemic. You're actually able to apply for both of those opportunities for funding with this new legislation coming off out of Washington. So PPP is really kind of the central focus, I think, for a lot of the COVID-19 specific support. But I also wanted to call attention to the economic injury disaster loan. And in particular, this loan, just so you know, is always available inside or outside of COVID-19. Many folks have applied to this loan in the past, whether that be for a hurricane, an earthquake, what have you, but it's also another resource for emergency capital up to $150,000. Now, as I said previously, the PPP loan is forgivable, and you can apply for that forgiveness as long as what you stated in terms of your application, you've spent those PPP loan funds on what you said you were going to spend it on. For EIDL, this is a long-term loan with favorable loan terms. It is not a forgivable loan. But to just make it clear, you may have heard EIDL in the context of the EIDL Advance, which were specialty loans that were given in the last authorization for EIDL loan funding, which targeted organizations really who up to 10 employees per small business that applied to the program could receive $1,000 per employee. That targeted advance program has since been suspended for lack of funds, but the SBA, the Small Business Administration, is following up with small organizations that did not receive up to the $10,000, whether it was because they were too small or they didn't choose to apply for that much money. They are following up with you individually to let you know if you qualify. So that's not something you can apply to proactively, but just keep a lookout if you've received EIDL funding in the past, whether a loan or the targeted advance, or the advance, to see whether you are whether you qualify for what's called the targeted advance, which is separate from the advance. And then lastly, I mentioned the SVOG, the Shuttered Venue Operating Grant, and this is something that really has been, I think, the child of a lot of advocates out there when it comes to small music venues, movie theaters, as well as theaters themselves. So this particular program really seeks to help these live experiences and communities across the US, particularly in shoring up a loss in revenue. And really they're prioritizing this by staking eligibility to the amount of gross revenue that you lost from 2019 to 2020. So that if, and additionally, I've actually worked on the Hill to advocate for museums in this particular program, SVOG grants. This really only applies to venues that have fixed seating. So this really isn't a grant for, say, if you're a museum or a cultural organization that sometimes has community events, because it doesn't allow you to really count, say, if you pull out 40 chairs and you have an evening program. It's really for organizations that have continually used their theater or their auditorium for ongoing programming, and has subsequently, given the lack of use, really has caused a drop in earned revenue. So that's a brief overview in terms of the eligibility and some considerations. I would say for these three main programs that have to do with grants and loans as a part of COVID-19 relief. And I believe that Chitra is next talking about additional forms of relief in the form of the employee retention tax credit.
Before we move on to Chitra, does anyone have any questions for Daniel?
Yeah, my question as you were talking, what about those museums that have theaters? Can they apply?
Yes, they absolutely can.
Okay.
As long as it's fixed seating and and as long as they can show that they had a revenue drop between 2019 and 2020.
Gotcha. All right, thank you.
All right, so Chitra, it looks like we've got quite a few folks interested in employee retention credits, and I know you're going to be covering that among other types of tax credits. So take it away.
Great, I'm excited. So I feel like it's my current mission in life to be an evangelist about the excitement about tax credits. So I'm going to start big picture, and then I'll talk about the specifics. And maybe I don't have to evangelize here if everyone already cares. In case I'm like, but I already made the slide. So bear with me if we do sort of big picture, we all feel pumped up, and then we'll talk about specifics. But here's sort of an overview about what to know about tax credits, and I will ask you to share it with your other nonprofit friends. So the first thing that's really important is to remind people that nonprofits, in fact, do pay taxes. And in fact, so nonprofits pay payroll taxes. And what you can see over time, in fact, is that the portion, right, the proportion of our federal budget that is funded by employers like nonprofits is much higher than what, for example, corporate organizations pay in corporate taxes. So when we think about being a tax-exempt organization, we aren't paying corporate taxes, but we are in fact required to pay payroll taxes, which are a regressive rather than a progressive form of taxation. So nonprofits, in fact, are paying a significant portion of the federal budget. So you should know that and get some of that money back. And so when we talk about when we talk about these tax credits, what we're talking about, we are not talking about what you often see on your paycheck when taxes are taken out. Those are withholdings. And so what is withheld from an employee's paycheck is their income tax, as well as Medicare and Social Security. But in addition to that, you pay payroll taxes on top of that. So you are withholding taxes, but those technically belong to the employee, right? It's for their future and then towards their income tax for the year. But in addition, an employer, you are paying Social Security and Medicare. So when we talk about the taxes, we're talking about this employer portion that is being contributed to the Treasury every time you do payroll. So that's number one. Number two, this is worth a lot of money. So there are two specific tax credits that you are eligible for as employers. The first are paid leave tax credits that you can be reimbursed up to $5,110 per an employee, depends on if they were sick or not, in 2020 and 2021. So up to $10,220 total. Also for paid parental leave, only available to employees who are parents who've taken leave, up to $12,000 per an employee in each year. This applies to organizations of 500 or less. So that's one set of tax credits, which I feel like nobody was asking about. And I'm like, it's a lot of money though. And then here's the one that's even, that's like even more money is the employee retention credit for 2020 is up to $5,000 per an employee. And for 2021, with the passage of the American Recovery Plan, it has grown dramatically, and it's up to $28,000 per an employee, $7,000 per quarter. So it's a lot of money. You guys know that. Okay. I just am going to talk about it's also important public policy. So the employee retention credits are fairly straightforward. They're trying to encourage employers to keep employees on the payroll. I think the paid leave, we sometimes miss what's so important about it because many nonprofits already are providing paid leave, but this is within the context that most small businesses within the United States do not provide paid leave. The paid leave that was mandated last year is the first time in the entire history of this country that paid leave has been mandated, and the first time it's been reimbursed. And so if you imagine that most people who work at small businesses do not have access to any paid leave, right? You understand why this is so big and why it's so not surprising that people didn't know about it, because it feels sort of like a surprising thing to have happened in the Trump administration. And so people didn't necessarily take advantage of it. But the good news is it can be retroactive. The thing that I hear a lot of nonprofits saying, besides the fact that they're like, tax credits don't apply to us, you can like be like, nope, you pay taxes. The second thing is like, well, we already provide the leave, so we don't need to get into this thing with the government. And there's two things here. One is they're paying you to do the right thing. So if you're already doing it, you should take the money. But the other thing is the current data on usage of this paid leave in 2020 is only 18% of eligible people took it. And the message, right? Well, I think that means the Department of Labor did really bad advertising, right? But I also think what happens in terms of data is it sends a message that paid leave is not needed. And we all know that there's been this, flurry of articles that people need paid leave. The other thing I hear a lot of nonprofit organizations saying is like, oh, we're fine, right? We're providing it. And it's great if you want to be generous, right? One is, and if you don't need the money, but the other thing is when you don't use the government support, you're providing data to that government that actually government support isn't necessary for paid leave. So you're essentially advancing the message that parents don't need it. So essentially you are taking an anti-feminist stance, which I think is really dangerous. And so even if you don't need the money, right, to understand how this data is going to be used, of like, oh, we provided it and people didn't need it, and understand how that will continue through decades to be used is really dangerous. So if you haven't used the paid leave credits, you should use it. The last thing is, I think there is often tension between parents and non-parents in the workplace, where parents are stressed because kids are walking in and doing things and they're still trying to manage everything. One of the great things about the paid leave credit is it's intermittent, which means parents can take it in like 3-hour segments. So you could just be like, I'm not going to work during lunchtime, just turning my computer off. And you're going to be like, I'm getting reimbursed for this time. So the parent employee doesn't need to feel guilty. Their colleagues who are not parents don't need to feel irritated to be like, I know you're actually not paying attention because you're dealing with your kid. And it encourages an honest conversation. And if, as a parent employee, if you know that your employer is being reimbursed, right, you don't have to feel like I'm not doing anything. And I've been telling people, it's a little bit like you're doing fundraising for your organization, but you don't have to like ask all your friends. You're just like, I'll take some paid leave and that will give us $12,000, which is like a win-win. So plus good public policy. 4, you have time. And so unlike PPP or EIDL or Shuttered venue, this is not a pot of money that goes away, right? In the same way, like if you don't pay your taxes, they're not like, oh, never mind, right? They're like, you still owe that money. If the IRS owes you money, right, you can claim it. It doesn't go anywhere, right? Like they don't say at this point, we cut this off. They do say that you can apply for it up to 3 years retroactively, right? And then if it's more than 3 years, there's an administrative thing of like what happened. But it's not like we don't need to rush for it and like be exhausted in the way that we have been for PPP. It's also to your advantage to tell everybody you know about it, because again, no, it's not running out. Everybody can claim it and nothing happens if everyone claims it, except again, we advance the idea that it is strange that the US is the only Western nation that doesn't offer paid leave. And it's great for all of us to support that change happening. And at the same time, so this is the thing that's slightly contrary, it's also good to get started if you want to, given that the way that you file for these credits, and I have more detail about this, but is on a form 941, which gets filed every quarter by your payroll provider. So for the first quarter of 2021, it's going to get filed in early April. And so if you want to just understand what's happening, it's great to start talking to your payroll provider and see what's going on. It's also great to talk to your colleagues and peers to be like, oh, do you have paychecks? Do you have ADP? Do you have Zenefits, Paylocity? And see, right? This is something where I think really sharing information is incredibly valuable, because the different payroll companies are just asking for different things. The other thing is you want to be strategic about how to maximize these credits because you don't want to double dip, right? Which is like the ongoing thing for all sort of nonprofit finance is you calculate these based on cash compensation and healthcare, but like, and so that's also the big part of PPP. But for example, retirement contributions are only in PPP; they're not in these tax credits. So if you're like, how do I do both? Right? You could just maybe do a lot more in retirement contributions this year, right? Like, and then not double dip. But there's ways to think about it so that you can do both. So when I say get started, there's ways that you might want to think about how you want to spend your 2021 budget. And as Daniel was mentioning, right, like you might want to think about if you haven't done forgiveness already, right, think about forgiveness of your PPP loan. But what I would say is before you file for forgiveness, you should look at whether or not you're eligible for retroactive credits, because that might impact how you fill out that forgiveness application. You might want to maximize non-payroll expenses. On December 28th, like very conveniently, they announced 4 new categories of non-payroll expenses.
Wow.
So now you can charge Zoom, you know, to the PPP for 2020, amongst other things. I, in general, don't like to encourage people to, you know, to run after invoices for like $18 because you're all busy, but there might be strategies here. So I kind of wanted to balance, and I'm just going to pause because I've got specifics, but I also wanted to just do big picture because I didn't necessarily think it was great to go too granular here, but mostly just to get you pumped up and to encourage you to talk to your payroll provider about the process because they are the ones who file for it in 2021.
Shuttered, I actually have a question. This is Daniel.
Hi, Daniel.
Hello, it's been a while. So for instance, I've been working with a client that actually had to pay one of their employees in accumulated paid time off or paid leave when they left the company. So I'm curious how that factors into the tax credit and what the impact might be when it comes to the employee retention tax credit.
So if you're so what, to be clear on, so now I'll just go to my other, I'm like, I have the other slides on this that might be useful. So the paid leave is you're getting reimbursed if you're offering additional paid leave, right? So if you give 2 weeks off and people took it, you don't get money from the government for giving people the leave they already have, right? You get money if you give additional leave, and these are the categories that you can take leave for. The most recent thing that just got added with the American Recovery Plan is if you're getting vaccinated and you need a day off. And so the fact that if you made a payment out in paid leave, that's fine. You can get that forgiven under PPP. If the person, for purposes of the employee retention credit, the paid leave is not going to count towards the wages that would count towards the employee retention credit. They would separate out salary then. But for PPP, so if I was trying to juggle, ultimately, this is like a big Excel party is right. What I think the thing you have to do is like get together with your friends on a Friday night or at night, you know, and like do a giant chart, right, essentially, because you want to allocate everything. And so paid leave, I would put all the existing paid leave under PPP, but keep salary here. And then as a reminder, this needs to be additional leave. If it's a leave people already have, they're not giving you the benefit. So in some ways, if you've got like for example, if you want to be flexible and give like Fridays off to everybody because you're trying to be great, what I would say is actually say, we're going to have additional time if you want to use it or something like that. So people have to ask for the leave because otherwise you don't get to claim this. So if you are flexible, you want people to start having people ask for the leave because then you can count it instead of just being like, take whatever you need. I trust you. That's great. But you want to have some documentation because you're able to claim it for these purposes. And to be clear, the documentation, your payroll provider isn't going to need it. It's only in case you're audited by the IRS about claiming these credits. And what's I think really important to say is the real focus here is on enforcement of failure to provide this leave. So all of the enforcement actions thus far and all the legal investigations have been when people are like, I think I have this leave, and the employer has refused to give it to them, or when an employer has claimed leave credits but not provided leave to their employees. But providing leave and then getting money for it is not, I think it's so rare because, again, you have to remember in the broader sort of small business sector, most employers don't provide leave. So that's the pervasive environment that this is trying to challenge. It's not the world of nonprofits who are often really good about giving leave, if that makes sense.
Do others have questions, either in the chat or you can jump on video to ask?
Hey Shitra, does this cover bereavement leave?
No.
Okay.
Yeah,
Thank
it doesn't cover. Also, Marvin, I had no idea what you looked like. This is, I'm recognizing names from other webinars and I'm like, what? Yeah, sorry. No, it doesn't cover bereavement leave, nor does it cover mental health leave. But one thing to think about it is so people are like, oh yeah, I'm totally giving my staff, right, time to just be like, listen, pandemic is intense, take some time. But what you can do again is then be flexible and be more flexible in your existing PTO. And then if people are getting vaccinated or people are having symptoms of COVID, use this leave, right? So you can play with it in terms of things that you think are important for COVID, making that part of your regular leave, and then things that people might regularly take sick leave for, use this leave, right? And the main thing here is you want to be consistent with all of your employees, because that's where it gets messy, is if you extend it to some people and not for others. The other thing, sorry, that I didn't say in terms of public policy that's really, I think, really amazing here is this sick leave extends to everybody. You don't need to even like, it can be your first day and you're eligible for it. So you don't have to have tenure in order to qualify, but you also don't need to be a certain amount of hours a week. So if you're like a teaching artist who's 10 hours a week, the way that the math works is you get 20 hours. So it's 2 weeks at whatever your average hours are. But it's far more progressive than most things we've ever seen on leave, so that if you've got, you know, a teaching artist or somebody who needs to take time and usually just has to be like, oh, I'm not going to get paid then, you can be like, no, take the leave, right? It allows you to be a far more generous employer. And I guess the other important thing to say is this started on April 1st, 2020. Originally, it went to December, and then people didn't use it and they were like, we're going to extend it to March 31st. And now with the American Recovery Plan, it starts again. So you get the 2 weeks of paid sick leave and the 10 weeks of parental leave again, April 1st. Like your account goes back to, I don't know, 0 or 12, however you want to do that math.
So if I know some organizations have been giving Fridays off to their staff just because everyone's exhausted in the pandemic. So we did that, graciously afforded that to our staff. But had we thought that this was coming down the pike, and had made everyone opt in to that Friday, then we could use that as extra paid leave. But because we did not, and we don't have the documentation, we cannot. Yeah. Damn it. So,
but you know it, you know.
No.
Yeah, you know it for going forward is basically, and I would tell people who didn't know about it, which is unfortunate, right? Because but again, I think it's on the Department of Labor, it's their failure to publicize it. Is part of my point of saying there's a ton of money is there's a ton of money in 2021. And so it's great to then be forward looking. So take the energy of being like, we could have gotten this money last year, and then generate into great policy for 2021.
This is Demetria.
Go ahead.
So I got a couple things, and I don't want to get too deep into it because we're also looking at the ERC, the Employee Retention Credit. Yeah. We received both PPP round 1 and round 2.
Congratulations.
We only had one employee. Thanks. Look, that was like a lot of work. All those spreadsheets you were talking about and gathering that information was.
You are an Excel superstar. Yeah.
More than a notion. But we had one employee when the pandemic first started that did take advantage of the paid leave, maybe about a month, but we also have a PEO provider. So those reports that go to the IRS, the quarterly payroll reports, it was such a small amount. I didn't even consider doing the paid leave, leave credit, because we had already applied and received the PPP loan, and that time frame was included in there. So that's the double, for clarity for me, is that the double dipping that you're referring to? Because it's kind of already included.
Right. But what your payroll provider will do, since they file for it, is they'll back it out. So if for example, you had claimed the paid leave credit, what the PEO would have done when they did a cash compensation report is they would have deducted that day of cash compensation. And given that you have 24 weeks to spend technically 10 weeks of payroll costs, most people have more than enough money so that you can actually, so you would just back out all of the credits. And if the amount you spent, if you've already filed for forgiveness, but you listed 24 weeks of payroll expenses, you're not going to double dip if you have an amount of payroll that's in excess of your loan amount, if that makes sense, right? Because if you list what you spend over 24 weeks, it's going to be greater than your PPP amount. So that amount is not double dipping, if that makes sense. Yeah. So the good news is, is because they expanded the PPP period, is you have a lot of flexibility. I think where people run into challenges is if, in addition to the PPP and these credits, they also have a number of sort of restricted government contracts around salaries. And my pitch here in general is that you should talk to your retirement plan contributor, because retirement is only PPP. It's not anywhere else, but it's considered a payroll cost for PPP. The flexibility in retirement plans is primarily in terms of withdrawing money, right? Like not penalizing folks who need access to cash. But for some retirement plans, you're also allowed to put in more money. And I'm a little bit like, if you've got extra PPP money and you don't want to double dip, it is not a terrible thing to support, the future of nonprofit workers who are often not looking at huge funds when they retire, because that's allowable under PPP. It's allowable for all of these things. It's a very retirement funds are super tightly regulated. So this is a conversation with your plan, the plan administrator, but it's something to think about strategically, about like just doing right by your employees. And it's just very rare that we get opportunities like these.
Awesome. Does this sunset in September?
Paid leave sunsets September 30th, and the employee retention credit sunsets December 31st.
Okay. All right. Thank you. And you probably said that before, but thank you.
I don't think I did, so thank you for asking.
Okay.
Any other questions?
Awesome.
Super helpful. That was really interesting. And Shishra, I really enjoyed how you framed this in kind of thinking about employees, thinking about supporting parents and a feminist lens. I appreciate all the different nuances you brought to the table. Very interesting. So we have some questions for Daniel that came through during registration that we're going to turn to now, that are on the Paycheck Protection Program, PPP. So Daniel, one of the questions we have is about how temporary restricted revenue, such as a donor gift for something in the future with no exchange, is accounted for when considering quarterly revenue change for the second round of PPP funding. So that's pretty specific, but maybe you can also help us think about it more broadly as it relates to this.
Right, and I did receive that question before this, and we had a nice conversation, Shitra and I, about this. So gross receipts is actually not defined when it comes to calculating what your income as an organization is across 2019 and 2020. What I would say, and I guess I'm going to lean on Shitra's answer around this, is that unless that income that's being referred to is across all the quarters from 2019 to 2020, I would just choose the best quarter from 2019 to 2020 that indicates a 25% drop in gross receipts. As nonprofits, I don't think that the SBA necessarily has a lot of experience working in this space. They typically support small for-profit businesses, which is sort of their target. And I did want to provide, and I can put it in the chat, we're in Region 5 of the US Small Business Administration, and they actually have, if not weekly, I believe probably bi-weekly office hours around SBA programs. So this, I think, would be a really great question for them to ask them directly, and of course your accountant or bookkeeper as well.
Thank you. And we
Sorry,
have one more.
I'm not an accountant, so I apologize. I can't get too in the weeds about that, but that hasn't come up so much for organizations that aren't in capital campaigns. From my experience, the accountant that I spoke to of one of my clients who's in a capital campaign stated that instead of putting the restricted revenue in the budget for income, rather just putting it as an asset on the balance sheet. But then I don't know, Shuttered, if you want to add into this. That's just sort of how far I could get with that question.
So what I just dropped in the chat is my colleagues at BDO FMA who are CPAs have put out guidance on how to calculate gross receipts. So I put that in the chat, which I think can be helpful. I'm just going to share a quick kind of gross receipts is Daniel's correct of like there's not a definition on a quarterly basis because gross receipts for nonprofits are actually only calculated right once a year on the 990. That's why it feels so strange. But if you follow the logic of the 990 and you talk to your auditor, you're going to follow the same sort of logic, meaning there are things that you don't include like unrealized investment, donated services. Like if you have a fundraising event, you count all of the revenue, right? You don't net it out. So that's the same as the 990. You also don't count your first round PPP. I think where it gets confusing is when we think about restricted funds versus sort of conditional funds. And I can put these slides also, I can add them in because I think the thing that feels very strange about restricted funding and gross receipts is for the gross receipts, you count all of the restricted money. So the full amount, even if it's multi-year funding, you count it in the quarter that it's pledged or received, even though that feels counterintuitive, but that's what you do on the 990. So if you got like a multi-year, I mean, you're golden basically if you got a multi-year pledge in 2019, right? If you did in 2020, it's going to be harder for you, but it's gross receipts. The only kind of restricted funding you don't count is actually what is known as funding with donor imposed conditions. And this is something that got set for auditing standards in 2018. And that it means two things. It means there has to be a condition that you have to overcome, but it also means there has to be an explicit right of return, meaning if you don't do these things, the money has to go back. That's the only money you don't count, but everything else you do count. And if you are confused, just talk to your auditor because it's going to be, again, the same process as your 990. And I think the main thing is that you're consistent with what your practices are. Mm-hmm. I do think the SBA is generally not useful at all on any kind of nonprofit finance. And the thing to always remember when they act like they don't understand what you're saying, it's because they'll just be like, that makes no sense. And I feel like I want to translate that as nonprofit finance is far more sophisticated than what we're doing, so we don't understand it, versus that makes no sense. Because actually, the way that nonprofit folks are dealing with restricted funding and all of that is at a very different level. And that's why it doesn't make sense, because you're all doing a lot more work. So checking with your auditor will be far more fruitful for this conversation than the SBA, who's going to be like, but why are you doing that? But they probably won't say, they'll make you feel bad, but actually you're just more sophisticated and advanced.
Marvin, did you have a question?
I was just going to say that I was worried about that question too when I asked our auditor, as I always do, and they said just use the total column, not the unrestricted column. Even though my soul wanted to use the unrestricted column, they said no, use the total column, because they did also say that's what the note will say at the end of the audit. So you should probably use that number because that's the number we're going to talk about. as your gross receipts as the total column, which is matching the 990 question, right? So.
Okay. Chitra, I just got an email notification while you were talking that the tax deadline has been extended from April 15th to, I think, May 15th.
Breaking news on the panel.
Income tax deadline. That's
Yes.
but PPP has not officially been extended yet.
I haven't. It didn't come across my
That's
little
the,
notification.
that's the other thing that we were hoping would happen during the session. And just so everyone knows, the House passed it last night with only 3 members voting against it to extend it till the end of May, second draw deadline, and I think it's in the Senate right now.
Okay.
So I think that's good. The other thing I just wanted to flag when you just reminded me about income taxes for folks who are consultants. You can, especially if you're parents, you also can claim paid because you are an employer and you employ yourself, an employee, you can claim up to $12,000 in paid sick leave as a refundable tax credit, which means it's below the line. You get $12,000 back depending on time you didn't work as a consultant or a freelancer because you were spending time with your kids. So if you are a freelancer on the side of your job or anything else, those same paid sick leave credits apply to you. And until I did my taxes, I kept saying this and then I did it and I was like, what? Like, that's insane, right? But it's insane, but it makes total sense because obviously parents are also freelancers. But if you are an independent contractor or you but you work with independent contractors, remind them that there's paid leave tax credits. The thing is, it's like, anyhow, you can email me about it because it's literally like Schedule 3 line something. It does not say this, and people's tax preparers haven't been flagging it. And I feel maybe equally, if not more, obsessive about this because that's a lot of money you can get back. That's also not being talked about in the way that all these other amazing tax credits are being discussed.
Thank you for
And
that.
I also saw that Yvonne, hi Yvonne, was asking about if we should expect a PPP 3. And so we have been talking about that from the last round of PPP, so PPP 2, which is now the current round. It doesn't seem that it's going to be all spent by the end of this round. So the hope is, like last round, that they'll just continue the program and include eligibility until the funding runs out. So, but if I were you, I would just try and get in your application as soon as possible. Now that the special period that the Biden administration put in place for small businesses has been expended, now larger businesses with up to 300 employees can now apply for the PPP second draw. So, the sooner you get in there, especially as a small not-for-profit, the more likely you'll be able to receive funding from your lender. So I just wanted to call that out.
Thank you. My 3 organizations did already receive PPP 2 and forgiveness for the first one. So ready for ERC. Thank you.
Next steps.
Terrific. Thank you so much for everyone's engagement and questions. We do have another section where we're talking about what is happening on the ground. And so I'm going to turn it over to Valerie to talk about implications for workforce development.
Yes, indeed. Okay. Here we go. And I am going to share with you, I guess, a couple emails I got and information from some other documents. Let me make sure I didn't turn too many. Okay. All right. So I got an email, I think within the past couple days, from the Illinois Department of Human Services about this program, Illinois Strong. And basically what Illinois Strong is doing is they're relying on community-based providers to work with them in mental health programming. So looking at this as, dealing with folks who are traumatized from COVID-19 and looking at some of the services they can provide, they realize that people who are in the community can more likely, reach people and give them the treatment that they need, in a manner that is culturally sensitive. And for those of you who don't live in the state of Illinois, you should probably, check with your own state's equivalent of the Department of Human Services. You know, any state agency that deals with social services, they're probably getting the same money from FEMA. And then I got another email. This is from account temps, but this lets me know that our Illinois Housing Development Authority, they just apparently recently are either anticipating CARES Act funding or they just got CARES Act funding. And as a result, they're going to need to hire people to help them service these new programs as it relates to mortgage assistance and rental assistance. And I can imagine that programs like this are going to be put in place all around the country as a result of the new law. So you should probably keep your ear to the ground as to, you know, how your state funded agencies are getting money, and then position yourselves accordingly. And then I just heard about this SBA Community Navigator model. So we are pretty much familiar with the community navigators that they had when Obamacare came out, where you had people in the community who were doing community outreach, making sure people signed up, making sure people understood the pros and cons and implications of Obamacare. Well, apparently SBA has adopted a similar model where they're going to be working with agencies, you know, nonprofit agencies, to do outreach to make sure that, you know, local businesses in the community can take advantage of SBA programs. And what's next? Can I talk about that now, or is that at another time?
But you go ahead and do that, Valerie.
Okay. What I think is next, or what we should be doing next, for the government, I think it's pretty clear that now that the law is passed, they're going to be making sure that the states and local governments get their money, and that'll probably come in the form of block grants. And then the states and local governments will in turn, you know, if they're not using it for their own programs and administration, they will probably have grants to local agencies. And if I were you, this is what I think you should be doing next. You need to talk to Brian Zaru. I don't know if I'm pronouncing his last name correctly, but he is the Director of Public Policy and Advocacy at Forefront. He's extremely knowledgeable, extremely effective in moving the needle on policy. Talk to him about what you think might be going on and how this act could actually apply to your organization. But before you do that, make sure you do your homework. You don't want to waste his time. And you also want to read the Biden plan. Remember, I told you that was a 200-page document, but the good thing is it's broken up in sections, so you don't have to read every section. Just look at those sections that apply to your particular situation and try to anticipate where the money might be coming next. And then, like I said, position yourself accordingly. That might mean partnering with other people. It might mean shoring up a certain skill, but you want to position your organization so that you can receive as much as you can as a result of that COVID-19 plan. You should also read the American Rescue Plan for yourself. We have only shared with you the tip of the iceberg, and I think we have shared an awful lot of information today, but this is only the tip of the iceberg of what is possible for you. And I'm not saying that you should read every page, but, you know, go to, well, we have a link to the site on the congressional website, and it has a summary. So you look through that summary and see which sections might apply to you. And then you go and figure out what else, you know, other than what we talked to you about today, could apply and how you might be able to take advantage of those funds. And you want to talk to your elected officials. Your elected officials, they know what's coming before we do. And also the policymakers, you know, the folks who might work in the administrative levels with programs, they have their finger on the pulse. You could talk to them and learn ways that you can position your organization to receive those funds. And again, start positioning your organization now. If you're in the state of Illinois, that could include registering with grants.gov. That's a federal portal, and you'll get notifications of federal grants. But in the state of Illinois, we have a counterpart at the state level, and you want to make sure that your organization is poised to qualify to apply for grants. You know, if you don't go through the process of registering, and, you know, I think there's like 7 different phases, 7 different qualifications you need to pass to pre-qualify to even apply for grants. If you're not pre-qualified, I think now is a good time to do it while we're waiting for the money to come through, so you can begin to apply for funds. You know, it's going to be a very fast turnaround time if, you know, if the future is anything like the past. So again, get ready, get ready, get ready.
And if I might, Valerie, just to jump in. So a lot of this work, and I think it really is proven through particularly the Shuttered Venues operating grants. A lot of this work is really based on the advocacy of countless not-for-profits around the country that really stepped up to talk about, you know, the importance of their organizations and serving their communities. So, you know, something to really hit home is that if something's not working with any of these funding paths that we've been talking about today, and you need specific edits or changes to the rules that could help your organization, you know, be sure to let your officials know, because your elected officials are there to serve you and not the other way around. So just
Are you from Chicago?
Changing the rules, I think, is not out of the question, but obviously if there are significant issues with these pots of funding that come up a lot, and they hear at, you know, in the offices, you know, whether it's the House rep or the senators, you know, those rules can change. And particularly that has happened with Shuttered Venues in terms of the creation of that pot, but also eligibility requirements, being able to qualify for that program as well as PPP at the same time. And then lastly, I would say too that it's really critical that, you know, we keep pushing for new programs that can help, you know, really soften the blow. I know that, you know, a lot of people are saying, oh, well, we're kind of turning a corner. It's been a year. People are getting vaccinated. This is just the beginning, I think, in terms of recovery. And what we've been trying to do is stopping the bleeding for the past year. So we're going to continue to need a lot of the support. And so just don't forget to just keep pressing your elected officials for that ongoing support.
Yeah, speaking of recovery, you know, I was just doing some surfing, and I thought I saw something that indicated that this is really just a plan to stop the hemorrhaging. That the hope is that, you know, the next big thing will be an infrastructure bill. So this is really a good time to try to help shape that.
Absolutely. One question that came up is, how do we support those of us who have constituents as part of our nonprofits? How do we support them in accessing and properly leveraging relief and avoid fraud?
It's interesting. I feel like we talked about this last week, and I've had some different conversations in the last week that have made me really, I don't know the answer to this. So I know that one thing is it's the most generous in terms of these child tax credits. It's the most amount of money, right? That's sort of a transfer to poor children. It's the most targeted, right? Again, since the New Deal. And that's amazing in terms of progressiveness and what has been accomplished. And one of the worries that I've been hearing is a fear that because many people don't pay taxes, right? Poor people who don't pay taxes, they end up not being able to get these credits. And the key term here is they're refundable tax credits, which means even if your tax burden is super low or negative, right? Like you don't owe any money. If you don't fill out the form, you don't get this money back to you because they don't have a way of contacting you. So I know there's a big incentive to get people, right, to not pay, but to submit paperwork so that they're in the system, because essentially they're using the IRS as the system. But the next thing that so that's one is it's really important for people to file their paperwork, and also be alert for people who are like, here's your tax credit, right? I'm texting you or I'm calling you, just give me this information, right? So there is going to be like all things of, and often people hustling in the same community where there are people receiving it, right? Like people who manage to like upwardly mobilize by exploiting their own community members are going to be like, oh, you know, you need to get that tax credit. Like, just give me this information, right? And things like where people are like, I will do your tax credits if you give me 50% of it. And I'll also say there's a lot of nonprofit hustling of people saying, no fee employee retention credit. We're just going to take 15% off the top. And I'm like, you can fill out that form. Like, call me if you're, you know what I mean? Like, don't, like all these no fee upfront, right? Because people are scared of taxes. It often is too good to be true. So I think one thing is the IRS has volunteer, there are lots of volunteer tax services, and alerting your constituents to people who are actually registered by the IRS. The thing that my friend works on is she's a consumer attorney, and what she's saying is all these debt collection firms are rearing up, getting ready to garnish the money that's about to come in.
Wow.
So that a lot of the people, and if you don't know, the average interest rate on consumer debt is 9%. There's been a movement to reduce it, but it's not. So even after a judgment, it is often increasing. So people often owe 10 times the judgment amount, because it's compounding. And so that they're waiting for payday, because suddenly, right, there's going to be information with people's social security, their name and money. And most debt collectors have relationships with banks, indicating which payments they can take and which they can't. So they can't take social security payments, but thus far these stimulus payments are not protected from debt collection. And so assuming there's an overlap between, right, marginalized poor people who lack access to credit, who are unlikely to file taxes, may often have outstanding judgments, may not have been notified of them. Setting people up to be like, pay your taxes, or not pay your taxes, but sign up, do all of these things only to have that money taken, feels terrible. And so the answer apparently is like, you get the money and then you withdraw it faster than any debt collector can move. But that's like a hard thing, and I don't know the answer to this. I was on the everyone, everybody should do this because they're going to get paid, but the fact that these aren't protected is this thing that is supposed to be the largest transfer of funds to the poorest population could end up just being the largest payday for debt collectors in this country. And so I want to say something more hopeful, but I'm not there yet. And so there are some great lawyers working on this to make this money not touchable. There apparently are some great credit unions and other banks that are less compliant with debt collection agencies, right? Like the big banks are not, right, because the money's all commingled, let's say. But so thinking about that, about where people open up accounts, whether they're willing to not do the bidding of debt collection, I think is just something to think about, because that is a new issue. And so there's both people who are not, who are not documented in the sense of for purposes of the IRS, right? Like not seen. And then those people who benefit from being not visible because of very old debt that was often far more than they originally owed. So I don't have anything hopeful to say right now, but I'm hoping that there will be changes, but it's something to be aware of.
Okay. Is the Center for Economic Progress still around? Have they changed their name?
Center for Responsible Lending, I think, is doing stuff on this. There's lots of movement on it. I just think they're moving slower than the folks who are like, everybody, make sure. And so I don't know the answer. I think different states are better on this. So it depends. New York is not great. So that's where I am. But yeah.
Okay, Susie, is Center for Economic Progress still around? Have they changed their name?
I will check into that. Give me just a moment.
Okay, yeah, there was a group in Chicago called Center for Economic Progress. I don't know if they changed their name or not, but every year they would work with low-income people to, process their 1040s and help them get tax credits. So groups like that, they have navigators on the ground who really understand how to do tax preparation. They understand the various tax credits. So if you can put your clients in contact with organizations like that, who have, relationships with the IRS and they really understand the ins and outs, that would be very helpful. Thank you, Jessie.
Their ladder up, yes.
Oh, a ladder up. Okay. Yeah, that's why I haven't heard, and this is tax season. By now I should have heard something, gotten an email. All right. So yeah, organizations like that, they go out into the community and they file taxes on, certain days as a public service. And, they should be very, very active right about now. And, they're not the only ones that do that kind of work.
Absolutely. Do we have other questions from our attendees?
Okay, so I just want to, oh,
Thank you.
Go ahead.
Can you hear me?
Yes.
Okay. I just kind of still clarity because the ERC was brought up, I think from I was doing another webinar. I love Forefront. I love you all. Let me just say that I appreciate the work that everyone is doing in FMA and BDO. So I have been reaching out to our PEO provider because we're getting ready to file for the quarter for IRS for payroll. And the application, because we have a third party PEO provider, are they the one who would apply or do I apply on behalf? I did it for the PPP, but I wasn't sure since they actually file the IRS quarterly.
It's them. I can put in a second, I can put a link in the chat. The IRS actually has a series of FAQs about dealing with PEOs versus payroll providers. If you feel annoyed by your PEO, like they don't seem to know what they're doing, you can file what's called a 941X, which is a retroactive. So like you can't file the 941 because that they have to, but if you want to do it on your own because either you don't like, you also have that option. It depends on your like feeling about forms.
Oh, they're great. We have Insperity. They are wonderful. So I just wanted to make sure that I needed to start.
Yeah, I can put in I'll put in the chat the link to the FAQs about it, so you can share that with them if they have any questions. But yeah, they do it.
Thank you.
And Susie or Claire, I imagine the links that are also being shared in the chat will be in the presentation and slides afterwards, just to make sure that those are often left out when passing along information.
Good flag. Yes, Susie and Key, please make sure.
Well, too, I wanted to share with this call, I have another Zoom call. As an attendee, you can actually save the chat to your own desktop in the chat.
I know how to do that, but then sometimes then you have to find it. It's nice if everything's together.
Okay, just trying to help.
Jessie, I saw you come on video. Do you have a question?
Yeah, I'm alive. I was wondering if I can crowdsource some advice here and see what payroll providers people use, because I use Zenefits and it's terrible.
Any recommendations?
Well, I use Insperity right now as a PEO provider, but I have used Paylocity and I have used Paycor, and I think those are two other great payroll providers.
I use ADP and I like them. I love them actually.
I use Zenefits also, and sometimes they're a headache, but I would say that I like them better than ADP because they sometimes take a little longer, but they usually give me correct answers. ADP was just a little clunky for the needs that my 3 organizations have. So Zenefits was more user-friendly and has an app, and they usually get to the right answer, even if it takes a little time.
Thanks.
Have not contacted them about ERC yet, though. I have to do that.
Oh yeah, you shouldn't. It's taken like 4 weeks to get an answer. I should really not say these things about them. Sorry. Okay. Thank you though for the advice.
Thanks for the warning.
It has been funny to see which payroll provider has stepped up when and how. like ADP really shifted and had all these 40 forms to have your PPP report, right? Even QuickBooks for advanced users can do a PPP analysis, but and like Gusto, as I mentioned before, they do it. They did a whole. They're newer, but they did a whole ERC. We can help you with your ERC if you need it. But it's funny. It's been kind of quiet at ADP, which we use about ERC. But it's before they were totally. You can see ADP. You can see PPP. But it's interesting how each provider chooses to be and chooses how they step up and chooses what to be in the moment.
Oh, interesting.
Any other questions?
I guess just, will this be provided on YouTube, the video?
Great question, Daniel. We actually have an Ask a Consultant page where we'll post the video and eventually a summary of notes. So if you want to refer back to this or share it with a colleague who wasn't able to join us today, you'll be able to do that. So if you just on the myforefront.org site and you search for Ask a Consultant, it should pop right up.
Wonderful. Thank you, Susie. So I'd like to give each of our panelists, a minute to just have some final thoughts or action steps you'd recommend for the group. So let's start with Valerie.
Well, I pretty much indicated my action steps that I would recommend to everyone. I just want to say thank you, everyone, for your time and patience listening. I will share the PowerPoint with you. If there are any other links that I missed, Claire, I'll make sure that I get them to you guys.
Yeah, I think we're going to have a really robust list of resources to share. Daniel?
Sure. I guess I'm going to give an update. Apparently, they just swore in the 27th Administrator of the U.S. Small Business Administration while you've been talking.
Breaking news.
Breaking news again. But one thing that I would maybe just call out for folks, this is a broad umbrella that we're meeting under today in terms of not-for-profits. Not-for-profits can be very specialized, so be sure to reach out to your, there's several groups that do theaters or several groups that do art centers, really try and network with not-for-profits that are like you, because I'm sure they're running into the same issues and have found strategies to get them through it. So just as another technique and getting this aid to help not-for-profit organizations.
Thank you. And Shuttered, you want to wrap us up?
Paid leave is really important. One, thank you for coming. I feel like you guys are all doing so much work. And so one, thank you for the work that you're doing and then doing this on top of it. And what I would say is if you aren't scared of sort of the bureaucracy of understanding all of these forms and taxes and numbers, just pay it forward to your other nonprofit colleagues, because I think there's a lot of people who care deeply about the work, but this can feel we all know the feeling that you can feel paralyzed when you look at a lot of forms. And again, there is enough to go around. And so I think if you've benefited at all from today, I would encourage you, because hearing it from a peer, I think is so much more powerful than hearing it on a webinar. And I think it can go a long way, because I think people are really exhausted, so that the more tips and knowledge you can share, whether it be about payroll provider or anything else, I think can go a long way. But thank you for everything that everyone is doing on a daily basis for the last year.
Absolutely. Thank you for that. Well, thanks, everybody. I thought this was a terrific conversation. Thank you to everybody for your engagement and questions and for taking the time today. So have a wonderful rest of your day.
Thank you. Thanks for having us.
Thank you.
Nice meeting everybody.
Bye, Daniel.
Take care.